Hi all and welcome back to TCM Education. If you remember guys, last week we talked about a stock that we called Wall Street Darling that disappeared and is back or making a comeback. And the stock was Red Robin Gourmet Burgers. The stock and the reason why we followed it is that over last Friday, 7 days ago, it gapped up like 60% on very good earnings, and that's a turnaround for a company that traded at $3 after being at one time more than 45 or 50. So that's a 90%, 95% pullback in the stock. And again, we know nothing about the burger business, definitely know nothing about Red Robin, but we know some things about the chart, some things about volume. And again, if we analyze when we analyzed the chart last week, we saw this spectacular 1,000% or 500% pickup in volume, and that was in addition to other factors a signal that this stock may continue higher. Normally we don't cover small caps on the channel, but from here and there, and when we see something spectacular, maybe it's worth watching those stocks. And again, that was last week. This week we have pretty much the same scenario. I will discuss immediately the differences between Red Robin and Phantom Pharmaceuticals. First of all, Red Robin, that's a burger joint, and Phantom Pharmaceuticals is anything but. That's a biotech company that produces, manufactures whatever type of drugs. And the news here that came intraday, and I will show you immediately the intraday chart, were a grant that this company received from the Food and Drug Administration. So it's not like they dramatically changed their fundamentals and they're selling more, or they developed a new drug or anything like that, but they got a grant for one of the drugs, which is of course worth money, and that's fine. Now what's similar? If you remember guys, if not, I will post the video for RRGB in the description below. Fundamentally it's very, very good when the holders of the company are institutional traders versus the general public, meaning our regular Joes, meaning us, day traders or swing traders or midterm traders or investors. While we want to cash in and move to another stock very, very fast, institutional investors are different type of investors. They're definitely not traders. They're looking for long-term profits, and they're not looking for 10%. They're looking maybe for 5,000%. I don't know what they're looking for. Bottom line, it's better to have, and this is what happens with the great companies, their major shareholders are institutional traders. Now, if we look at the top institutional holders, sorry, I said traders? No, it's holders. So top institutional holders in Phantom Pharmaceuticals are, I'm just listing a few: Invesco, everybody knows Invesco, BlackRock, Vanguard, Carlyle Group, Medici. So those are deep pockets. They're not in the business of selling. I'm guessing Phantom Pharmaceuticals after one day of profits or a gap or whatever. So what's similar? Again, now let's look at the chart, and then I'll discuss the different issues. So you can see huge gap up in volume, reminiscent of RRGB. Okay, and huge up in price. RRGB was up 60%. This one is up 90%. So there are similarities, meaning most of the shareholders are in RRGB institutional traders. Most of the holders in Phantom Pharmaceuticals are institutional holders. Like 89.5% of the float is held by institutions. That's amazing. Another issue with this company, as opposed to RRGB, where there were almost no short positions, here 21% of the float is short. That means that there's really, I don't know, very little belief in the company. I mean, the shorts took the company from, let's see, the price 5 years ago. The price action 5 years ago. Actually, I don't know why we cannot see it. Okay, 5 years. Okay, 5 years ago, $64, maybe it was the IPO or something like that. And the day, Thursday it closed at 4. So similar 95% or something like that pullback in the price. So now let's go back and analyze and see if we can take advantage of this stock, and using the same logic that we used in RRGB. So again, you want to trade, and because we're not talking about investment, this is not our strategy or our business, but again, if you enter the trade, and now it closed at 890, where can you enter? Can you enter at 10? It doesn't, because I don't know right now where it's going to open Monday morning. If it's going to open down, if it's going to open up. Again, this gap up is, and huge pickup in volume is not going to go unnoticed by many retail investors. Okay, not necessarily retail traders, but you know, retail traders, retail investors, maybe some additional institutional investors will finally pay attention to this stock, which was totally off radar for, I don't want to say years, but definitely for months. Yeah, it double topped, as you can see here on the chart, at 20. That was pretty much a year ago, and lost 80% of its value. So again, if this is a reasonable target, this 20 level, this one can still go places. Again, I'm just looking at the chart. I don't know what's going to happen on Friday, and on Monday morning, and if investors and traders will come in, or if there's going to be another wave of profit taking. Again, the good issue, top institutional holders are holding a lot of the shares. The bad issue is that this is a grant. It's not even a money grant. It's like a grant for a period of time where the stock won't be able to encounter, not the stock, the product that they're selling. I don't know if this is what kind of drug that they're selling. The drug won't encounter competition. That's from the FDA. So they got some exclusivity deal, which is definitely worth money. But again, it's not like they improved significant, maybe not at all, their balance sheet and their. Again, I'm not going to get into that. So overall, let's wait for Monday. Watch the chart and watch the open on Friday. And some of you that are looking for trades, I would look for round numbers, 950, maybe 10 for an entry. Again, being that this is a volatile stock, you need to take into account percentages higher versus what we normally talk about when we analyze the leading stock, like 1 or 2% risk. This is not going to go with a trade in this small cap, or most of the small caps cannot go with tight stop losses in terms of percentages, maybe in terms of cents, but not in terms of percentages. So that's something that you need to be aware of. Now, can it repeat the RRGB scenario? Yes, because there are some similarities, and no, because it's not earnings. So there are similarities. Huge pickup in volume, that's a super important signal. Then in RGB we didn't have short covering. In this one we do have short covering, or some short covering. I don't know exactly. Nobody knows exactly how many positions short covered. We have a lot of institutional investors, or dominant institutional investors holding in both companies. both companies are down 90 to 95% from their all-time highs, so there's lots of room for reversal, at least technically, and that's worth watching. Those who like to trade this segment of the market, meaning under the radar, under $10 stocks that do pick up in volume, and we actually don't know anything about drugs, and we don't know anything about this company, and it turns out that most of the market doesn't know anything, including their investors, and that's fine. That's how stocks move up and down. How can a stock move up 90% in one day? Because nobody knew, and now they know. So that's pretty much the concept of this video. Please like and subscribe, and even better, maybe share this video with some of your friends, and we'll definitely look for more ideas like this one, which are exciting. Again, not the best companies to buy, not the best companies to day trade, but on the fringe, once a week, some of them are good and profitable idea. Thank you guys for being with us, and we'll see you in our next video.